New report. The FDIC may have to borrow money from the Treasury. The money needed to see agency through an expected wave of more bank failures. The Federal Deposit Insurance Corporation, FDIC, might very well have to borrow money from the Treasury Department to see it through a wave of bank failures, the Wall Street Journal has reported. The borrowing of money could be needed to cover short-term cash flow pressures caused by reimbursing depositors immediately after the failure of a bank, the report said. The borrowed money would be repaid once the assets of that failed bank are sold. Yes, the bank failures are coming. Very possibly. And I would not rule out the possibility that at some point we may need to tap into short-term lines of credit with the Treasury for working capital. Chairman Sheila Bair said in an interview, she said, such a scenario might possibly be unlikely in the near term. But after that, well, with a rise in the number of troubled banks that could possibly fail, the FDIC's Deposit Insurance Fund, used to repay insured deposits at failed banks, has already been drained dangerously low. In an effort to replenish the $45.2 billion fund, the chairman said on Tuesday that the FDIC will consider a plan in October to raise the premium rates banks pay into the fund. Well, you know who's going to be paying for that too? For customers. Banks will just raise their fees, right? A move what will further squeeze the industry. Well, which could lead to more bank failures in some kind of way. The agency also plans to charge banks that engage in risky lending practices significantly higher premiums than other U.S. banks. Well, that makes sense, of course. The last time the FDIC had borrowed funds from the Treasury was at nearly the tail end of the savings and loan crisis in the early 1990s. The fact that the agency is considering the option again after the collapse of 9 banks earlier this year illustrates a concern among Washington regulators about the weakness of the U.S. banking system in the wake of the credit crisis. And yes, it's getting weaker. The U.S. banking system is in trouble. And this, I guess, could go along with it. More coins, more dollar coins circulating without "In God We Trust." And that's very, very bad news for this country. An unknown number of new George Washington dollar coins were mistakenly struck without their edge inscriptions, including "In God We Trust," and are now getting around $50 a piece online. The properly struck dollar coins bearing the likeness of the nation's first president are inscribed along the edge with "In God We Trust," E Pluribus Unum, and the year and mint mark. Why are they on the side? Well, anyway, that's something from the 1930s. Well, that tells a story, doesn't it? what was in the 1930s? The Great Depression. Yes, it's very possible that there will be another depression, or Great Depression, coming to America. The flawed coins made it past inspectors and somehow went into circulation. On February 15th, the U.S. Mint struck 300 million of the coins, which are golden in color and slightly larger and thicker than a quarter. About half were made in Philadelphia and the rest in Denver. So far, the Mint has only received reports of error coins coming from Philadelphia. It is unknown how many coins lack the inscriptions. Ron Guth, president of Professional Coin Grading Service, one of the world's largest coin companies, said he believes that at least 50,000 error coins were put in circulation. The first one sold for $600 before everyone knew how common they actually were, he said. But now they're going for around $40 to $60 on eBay now, and they'll probably settle somewhere in the $50 range for the coins that don't have "In God We Trust" on the side. Well, there's a sign in there somewhere. It does mean something. In other words, people can fulfill Scripture without even knowing it. Production of the presidential dollar entails a new, complex, high-volume manufacturing system that the Mint will supposedly adjust to eliminate any future defects. The Mint has said in a statement. Guth said it appeared from the roughly 50 smooth-edged dollars. He has authenticated that the problem had to do with quality control, rather than a mechanical error, whatever that means. These coins are struck like normal coins. Then they go through another machine that's supposed to add edge lettering in another process. Somehow, these apparently skipped that process. Of course, nobody really knows how that happened. People can fulfill Scripture even without knowing it. We've seen a couple of instances where the edge lettering may be weak or indistinct. But anyway, we're not talking about that here. The coin's design has already spurred email conspiracy theories claiming that the religious motto was purposely omitted. Well, whether it's purposely or accidentally, well, there's a sign in all this. A sign of the end times, transition days. Yes, very well could be. That rumor may have started because the edge lettering cannot be seen in head-on photographs of properly struck coins. Yes, there's something wrong with that too. It is the first U.S. coin to have words stamped around the edge since the 1933 $20 gold double eagle, theoretically among the rarest and most valuable in the world. The 215-year-old Philadelphia Mint, located downtown on Independence Mall, last year produced approximately 7.8 billion coins. These are more signs, the end times, transition days, and there are many, many signs.